Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, it's a good momentum that we have at our hands. Considerably off the lowest point of the trading session. So Nifty is up 131 points. But if you look at the lows of the trading session, we have managed to gain over 300 points on an intraday basis, very close to the highest point of the day. The move has been led by Bank Nifty today. That index is up a solid 1.7%. A 850 point move coming in on the Bank Nifty at this point of time. It's been led by Axis Bank, which is charged up after its earnings. The earnings weren't that great, but the fact that the positioning of the market was a bit negative is something which is supporting the sentiment on that one perhaps. Plus, there were of course some of the internals that looked positive. We're also watching out for Wipro, which is seeing a great amount of traction right now with the kind of earnings it reported. Q3 guidance might be weak on account of seasonality and furloughs, but it was that big beat coming in Q2 that has supported the sentiment for that one. Eicher Motors, ICICI Bank, these are some of your other top gainers. On the losing side, however, Infosys is down. Remember, the margin miss is something the street did not like. You also have Britannia, Nestle, HUL, Asian Paints. Some of these consumption pockets are on the back foot today, Aisha. But of course, a lot of individual newsmakers, whether it's the CGDs or Manaprams of the world.
Oh yeah, absolutely. Haven't seen any resurrection whatsoever when it comes to Manappuram for sure. The stock gapped down and since then has struggled to see any amount of resurrection, still lower by about 13.5% as we speak right now. Of course, the RBI has restricted Ashirwad Microfinance, which is a 94% subsidiary of Manappuram, and which is why the direct impact on the listed entity. There are going to be sanctions and disbursements which are going to be barred come October 21st. And of course, brokerages left, right and centre have downgraded the stock only further. Polycab and the investor call highlights weren't all that well. While they're saying that they are going to be achieving that 20 billion revenue by FY25 itself, the quarterly performance hasn't gone down well with the street, though even Polycab has recovered from the session lows. Axis Bank, that's really been the astounding mover amidst all the gloom that of earnings that we've been seeing. The Q2 one-offs have led to a beat in PAT. The positive triggers, of course, according to brokerages, are the recoveries, contingent provisions that they're going to be making going forward as well. But let's welcome on board our experts, Nishal Maheshwari on the show with us, Naresh Mirani too. Nishal, hi, afternoon. What is it that you're making of this extremely volatile market and complete disconnect from what the Western markets at least are doing, both Europe as well as US?
So, afternoon, Aisha. I think some amount of profit taking is happening in India, basically. Yes, it is a bit of a disconnect. If you compare this, basically, that's been a very solid market as far as US is concerned and even in the Southeast Asia. But here we are seeing some amount of profit taking, some amount of disappointment as far as earnings are concerned in the current quarter. I think mostly if you really look at it, all the consumption companies have been reporting slightly subdued numbers, and obviously autos, Bajaj Auto results were really bad. So I think that's what is actually taking a bit of pressure onto the market.
Okay, that's the pressure point. The earnings haven't been that great, and of course, we had run up ahead of earnings. But Naresh is also with us on the show. Naresh, hi. What do you make of this reversal that we are seeing of sorts in Bank Nifty? Quite a bit of traction today.
So very strong reversal on the Bank Nifty. It has crossed the recent swing highs, very similar to what 25,200 top, which was there on the Nifty. So strong reversal, and that is changing the whole momentum on the markets. And also the fact that we went below 24,700 made a reversal. So it looks like a classical false breakdown. And in that case, 25,200 crossing on the upside would be a major confirmation on the Nifty. Overall, there were divergent moves in the downside tick in the last few sessions. We did not see a similar downtick on the Nifty Bank, the mid cap and the small cap indices. So we are back into an uptrend, and globally things still seem to be very fine. So time to be more stock specific. The bias still remains positive.
Okay, the bias still remains positive, but what's the view, Nishal, when it comes to Manappuram Finance and some of these gold financiers and the issues that they're going through right now? Is this dip a buying opportunity or just stay away?
I think for the moment it is a good time to stay away, because I think RBI again and again is coming and very clearly telling them that to go slow. And this whole thing, earlier it has been with several other NBFCs also. And similarly, I think here also, first time RBI has now picked up MFIs. So Ashirwad basically, which is 100% subsidiary of Manappuram, I think they may be coming after the MFIs also. So I think that's a very clear guideline which RBI, or not a guideline, but a guidance which RBI is saying that go slow on the growth part. So I think in that kind of a scenario where RBI is giving you a hint, it's best to avoid all the NBFCs for the moment.
Avoid NBFCs. That, of course, is the word coming in from Nishal. You've got Kotak, you've got HDFC Bank all reporting their numbers this weekend. And then, of course, Axis. That is one stock which actually is standing out, although the Q2 one-offs is what has actually led to the pad beat. Nishal, early days yet, but anything to take away from Axis Bank's performance?
No, I think a bit subdued as far as growth is concerned. I think growth was a bit subdued, but I think they have done very well as far as the quality of asset is concerned. So there, I think that's why I think the market is also giving them a thumbs up there. So quality of assets is very good. Provisions they've increased the provisions basically partially out of the tax break which they've got. So I think that's why you are seeing good momentum there. But I believe, as I was telling earlier, they are also taking a hint from RBI, saying that go slow on the asset side. So that's why I think they are also going slow. Maybe you will see similar kind of a trend happening across all the whole sector. As the results get done, basically everybody is taking a cue from what RBI. And I think it was a big concern also, if you really look at it, the kind of growth which we are seeing on the credit side, that was really very aggressive in the last few quarters. And I think some amount of moderation was expected. This is what is happening also.
Some amount of moderation was expected, and it seems like it's a day which has been marred by regulatory issues or some sort of action coming in on the policy front, Nishal. And I'm talking about the CGD space now. The city gas distribution is taking the hit on account of the APM allocation getting cut, very sharply. If I have it right, you do have coverage on a few of those city gas distribution names. What would you recommend investors to do right now?
So, Manisha, I have left Centrum, so I'm on my own basically, and so that's why I do not have any coverage now. So that was my previous organization. But I do understand the space. I think this is a bit more than what the market was expecting. And that's why you are seeing this kind of a negative reaction. But I think this was sort of expected. I'm saying the amount may be much more than what the market was expecting, but the cut was expected. So I think that's what we are seeing at the moment. But our earlier pick used to be MGL only.
Okay, so that's the view coming in as far as the city gas distribution space is concerned. I think I made a folly with the brokerage house earlier. You made the folly with my name. It's Anisha, not Manisha, but nonetheless, that's the view coming in as far as the entire sector is concerned. But let's hear out the expert opinion.
My apologies.
No worries at all about that. But let's hear out the expert take on that. Maulik Patel, the director from Equirus Securities, joined us earlier to talk to us about what he thinks of that sector.
Everyone has to increase the price if they want to maintain the margin. The price increase for the CNG customers can be in the range of around 3 to around 4 rupees per kg. Given that there is state election in Maharashtra next month, MGL will find it a little difficult to pass through the entire the price increase. For IGL and Gujarat Gas, we expect that they will do in the 2 tranches, probably one immediately, and one probably a couple of weeks down the line. ONGC is not a primary beneficiary other than that the C2, C3 or the Opal plant, which has been in a loss making. If you have read the news that a couple of months back, the government has given a large package to improve the financial position of the Opal, which is a subsidiary of ONGC. So obviously, Opal will benefit because they will get a lot of cheaper gas.
Right. Okay, that's the take then coming in right now on what to do with CGDs, which are definitely seeing quite a bit of slamming still. But the one stock which has made a marked recovery has been Polycab. We just highlighted that for you. While the earnings, of course, were a disappointment, but the conference call details are something that the street is sort of heaving a sigh of relief after. In the investor call, they've said that they are going to stick by with the guidance of 20 billion rupees revenue by FY26, and that's going to be achieved in early FY25 itself. In fact, let's first hear out from the management, and then we'll take it across to Nishchal.
In the fiscal 21, we had embarked on a project, a transformational project by the name of Project Leap, under which we wanted to achieve 20,000 crore or 200 billion of fiscal 26. Considering the fact that we have already crossed 10,000 crore rupees in the first half of the current fiscal, we firmly believe that we would be able to meet our target of 200 billion in the current fiscal itself. So demand environment is robust. We are getting demand across all the sector. As far as EBIT margins are concerned, we have our strategic roadmap in place and we are implementing that. And in the next fiscal, we should be able to improve on margins. However, in the current year, it's quite possible that we end up having some amount of losses as far as FMEG business is concerned.
Okay, that's a view coming in as far as Polycab is concerned. But Nishchal, a bit more color on this building material space. Of course, real estate's sector itself is doing well. But if you look at the margins coming in, whether it's KEI, whether it's Havells, whether it's Polycab, the companies are reporting robust top-line growth, but it's not turning into profitability. What should an investor do in this case?
So I think this may be temporary. If you hear to most of these calls, basically, they are saying that it may be just maybe a temporary phase, maybe a quarter or two. Obviously, the issue remains to be the raw material side where the prices have gone up. And that's why. But given that the outlook as far as sales is concerned remains to be robust, I would say basically remain invested. Because if you really look at it on the FMCG side, on the other consumption side, basically the companies are even struggling for the top line. So at least in FMEG, that way, I think the concern is not there as far as growth is concerned. Yeah, margins may be a bit tepid for the this quarter and the next. But given that you are now getting into the festival season, I see a strong demand and the possibly a margin uptick also in the next quarter or two. So remain invested.
Invested. That's the clear conviction that perhaps these issues are transient because the managements are talking about revenue growth being strong and of course a reversal potential in Q3, Q4. So stay put, deal with the volatility. That's the view coming in. What else is happening in the market? Well, it is Motilal Oswal, which is up a solid 12% right now. You have Anand Rathi Wealth, which is up 5%. Paytm has managed to perk up quite smartly right now. So that stock too will come up for you on the screen. Some of these names definitely doing well in the trading session. What's been the reading so far of the IT sector suggests that there is some improvement in demand environment, but the share prices have run up. Naresh, what's the view on the charts then? Because all of these stocks and the top IT companies have run up 20 to 30% in the last 5-6 months itself. Do you see a correction now or do you see further up move?
So out here, continuing to see divergent moves. So today there is a LTI-Mindtree which is down. Then you have Infosys which is down. At the same time, you'll see some other names like HCL Tech which has continued to do well, or an HCL Tech which continues to hit 52-week highs. So out here, it's a buy only on a sharper dip. So you see a 10% correction on the stock in the IT names, then maybe you can get in because they've already moved up 30% across the board from the election day lows. So out here, the risk reward is not great to chase right now, but it remains a buy on dips.
On dips, that's the call on IT. In fact, let's hear out from all of those IT majors and what the managements had to say post their numbers.
North America and Europe, we see good, UK, we see good growth in banking. And capital markets has been weak. Insurance has grown, and regulations and risk and compliance has also grown in banking. Europe, it's more or less very similar trend. UK, we are again the capital markets has been a problem, but also good thing is banking is coming up, insurance is coming up. so which we hope will sustain in the coming quarters.
So we see financial services, the discretionary spend is looking stable, strong, especially as we highlighted in capital markets, cards and payments. We also shared that in automotive we see slowness in Europe. In the other verticals, the the discussions with clients are similar, so we don't see any change.
At this point in time, based upon what we have seen in the last couple of quarters, BFSI, specifically in the US, we are seeing good momentum, and in Q2 itself, we have seen a growth coming in from BFSIs. The second part of it is some of these deals that we have won, some of the opportunities that we are getting are consulting-led, leveraging Capco. So that also obviously reflects some of the discretionary spend that some of our clients are doing. So net, I think it's right now it's positive. I can't predict what is going to happen 6 months, 6 quarters from now. But as of now, from the vantage point I think we are seeing a good momentum in that sector.
Like a normal quarter where incrementally the demand was better, so services overall revenue came much higher. I said last quarter that all the verticals will grow sequentially except financial services, which was going to decline because of the State Street JV divestment. But even if you kind of exclude that, financial services has grown the strongest.
Back with closing trades right here on 18 hour. Kunal Botra as well joins in on the show. Kunal, what is it that you're making of this rebound that one is seeing?
I think it's a good rebound, much needed relief for the markets after the last 2-3 days of this sharp sell-off from 25,000 to 100 odd levels, which started off in this phase of in the early phase of consolidation. I think it's a good relief, and this reinstates the fact that 24,750 mark is not just a nominal support for the index; it's a very strong support. So even though there was an intraday breach of the 24,750 mark, but I think on closing basis, looking at the current prices, we should be holding on to that level, which means we could be looking at a solid base for the index. And now the best part about the charts for the indices is Bank Nifty forming a bullish, engulfing pattern. This is a very strong candlestick pattern for Bank Index or the Bank Nifty, and this indicates that today's low of 51,000 odd for the Bank Nifty should be a very strong base. That should be a stop loss from a near to medium term play for Bank Nifty traders, and we could be looking at higher levels, much higher levels, even from current zone for the indices.
Okay, so that's a take coming in as far as the banking index and the market setup is concerned at the moment. Let's pull up the intraday chart of Zee Entertainment. That stock should come up for you on the screen. The numbers have just hit the screen. The total number in terms of income stands at around 2,034 crore. That compares with 2,510 crore that the company reported last year. Even if you look at the profitability figure this time around, and I'm looking only at profit for the period from continuing operations, that stands at 210 crore versus 130 crores. So the profit from continuing operations has almost doubled on a year-on-year basis. Even quarter-on-quarter there has been a big improvement. There is an exceptional item, but the exceptional item is just 11 crores, so can't really put the entire performance to that. The advertisement revenue has actually gone down on a year-on-year basis, but the subscription revenue has gone up. And that is what is, I think, supporting the overall sentiment for Zee Entertainment right now. So the profit for the period and the profit from continuing operations has gone up. There is an exceptional item to it. Advertising revenue is a bit flat, but the subscription revenue has jumped up. And that explains the bit of a reaction that we are seeing. The consolidated PAT up for you on the screen, 208 crore, coming in 209 crore to be honest on a consolidated basis for the entire period as such. Before we move forward, a quick word on the chart check of this one. Naresh, would you have a view?
The stock has continued to be in a downtrend. 125, 130 is the last support which has been there, and that was also the low back in COVID. But till the time it doesn't break out above 145, the recent swing high, the trend still remains weak.
Okay, that's the take coming in on Zee, reacting to its earnings. Quite a bit of spike up coming in there. But let's talk about not equities, but a different asset class, which is also, shining pretty much on a daily basis. And gold once again has managed to hit an all-time high. Let me take it across to Ashesha and get in more info on whether or not these gains are going to sustain for the best performing move that one has seen in Ashesha, 14 years?
What a run it has been. In fact, over the last 1 month, gold prices have risen nearly 5% and on a year-to-date basis, gold prices have risen over 30% and gold has reported highest ever returns in the last 14 years. Let's talk about several reasons. Rising geopolitical tensions, dovish commentary that has been coming in from central banks globally are some of the reasons why global gold prices continue to surge. In fact, it's not just about global prices. Prices on multi-commodity exchange or MCX have also risen exponentially, and gold now trades at about 77,000 rupees per 10 grams on MCX as well. Remember, strong buying by domestic investors back home in India on account of upcoming wedding season is one of the reasons why gold prices continue to surge in the domestic market as well. Let's also talk about some commentary that has come in from global brokerage houses and global associations. So London Bullion Market Association believes that gold prices could cross $2,940 per ounce over the next 12 months. UBS meanwhile also continues to remain very bullish on this yellow metal. In fact, they expect gold prices to cross $2,750 per ounce by the end of this year, and that it could touch $2,900 per ounce over the next 3 to 4 years. So brokerages globally continue to remain very bullish, and gold yet again at another record high.
Gold yet again at another record high. The other thing that we just wanted to highlight on Zee Entertainment is the reappointment of Puneet Goenka as the Managing Director and CEO for a period of 5 years up till December 31, 2029. So that's just the additional detail coming in. But I wouldn't call it as a big surprise given how the other, how the entire setup has really panned out with Zee Entertainment. Shifting focus away from that one then and talking about the IT companies a bit more. Just wanted to get a sense from you as well, as to what the overall take is with respect to the IT sector right now, because we did hear the management of LTI Mindtree talk about how Q3 is going to be a bit more volatile. They are expecting the second half of the year to be a bit under pressure. Nishchal, what's your take on the IT sector?
So Anisha, I am very bullish on IT sector actually. I think the worst is behind us. Yes, the stocks have run away, but you are just seeing the first signs of recovery in the US. And if you really look at it, you had put out all the 4 people, all the 4 of them have spoken about BFSI sector doing reasonably well or better than their expectations. Now, BFSI itself is more than 50% of revenues for most of the companies. So if that has started turning around, I think it's really good for the IT sector. And we have started seeing interest rates cuts happening. So that's where I think the discretionary spend should also start going up. So hold on to your IT. At every dip, I think IT is a buy.
Right. Okay, Nishchal, great to have you on the show. Thanks as always for taking the time out and joining in. Let's just see where the market is now settling in at as we just got half an hour more to go before we wind down for the week. We're holding on to the gains so far, at least about a 0.5% uptick. But I think what's more meaningful is the kind of move that you've seen from the session lows today. Axis is now scaling up about 5.5%. Wipro is up 5% right now. And some of those beaten down auto names are the ones which are seeing a marked recovery too. So Eicher, for instance, is one name which is holding up 3.5%. There's Tata Motors, which has climbed up about 2%. But what is Bajaj Auto up to? While it's recovered most of its losses, but it's still not sprung back into the green, still lying flat as we speak right now, and so is the case with Maruti too. Naresh, do you feel that there could be further weakness in the auto pack in the days ahead, or do you think, an Eicher and a Hero MotoCorp at least, along with the Tata Motors, are safely out of the woods?
So I would say Eicher Motors is out of the woods given the fact that it has not rallied in the last 1 year like the other names. But if you look at a Hero MotoCorp, Bajaj Auto, Tata Motors, they've all gone up 100% plus in the last 1 year. So they could get into a sideways phase, not really a further sell-off as such, but a sideways consolidation after a little bit of a bounce given the last 2 days of fall in Hero MotoCorp. But I would still like Eicher Motors out of the whole pack.
On that note, let's take some closing strategies too. Kunal, what's on your list?
So I'll go with the banking major. ICICI Bank, after today's move of a couple of percentage points, the stock bouncing off from that 12, 30, 40 mark. This could be now considered a very strong support. And we could now be looking at the stock coming back to the previous highs of 1340, 1350 approximately. So looks attractive at current levels, especially in terms of risk reward.
Right, Naresh, what about your closing ideas?
So that would be a buy on Tata Steel. The stock has corrected from 170 all the way down to 150 over the last couple of weeks. A good base around that 145, 150 mark was also the election low. So looks like a good risk reward entry point. Would keep a stop loss below 150 and expect a bounce back towards 170.
On that note, let's take a very quick break. The recovery is well in place. Let's only hope it sustains in the next half an hour.
Welcome back. Well, the overall strength in the market really continues. Yes, we are just, off the highest point by just a few points, but it's the small cap index which is building on to gains as well, because that one was the one which was in red the entire time. Now it's at least moved into the green. So all the key sectors and all the key indices now are trading in the green at the moment. You also have Tejas Networks up 7%, DOMS Industries, Wipro of course holding up nicely. M6 India has also managed to perk up. In fact, real estate pack is something that we're going to put the spotlight on. My colleague Anurag Shah caught up with the management of Godrej Properties, and they are talking about how the momentum is likely to continue there as well. Hear out what that conversation was like. My colleague Anurag Shah with the Godrej Properties Management, because the overall sector has seen quite a bit of run up of late in the last couple of years, but now there was that discussion that perhaps the inventory is getting too much in the system, etc. But that's the stock that we're watching out for. In terms of the fundamentals though of that segment, let's discuss that with Jonathan Shizzle, who's joining us on the show right now. Jonathan, what do you make of the real estate market in India if you've been tracking that? Because the upper end of the market was doing very well, but at some point of time the cycle was expected to turn. Do you see that happening now, or it's still a bit away?
Yeah, it's a part of the Indian markets which we sort of don't do a huge amount of work on, if I'm honest. We have looked at a few of the high-end developers previously, but obviously real estate of all industries is very localized. So it's difficult to sort of put a broad view on the entire space. But that said, clearly, some companies in certain pockets have done extremely well, as you say, more recently. But clearly, the underlying economy is humming along quite nicely, and yeah, certain companies in certain localities are doing relatively well, but it's not something we focus on too much.
Okay, so that's a take coming in on the real estate sector. In fact, let's hear out that conversation with the Godrej Properties Management.
The India story is finally playing it out. I think the leader in the pack has still now been NCR and Bangalore. But whether it's Bombay, which has started showing great volume and price growth this year, and Pune yet to show price growth but great volume growth, and some price growth already happening there, I think it's a very, very good time. On tier 2 cities, I think again there's a lot of latent demand, but yes, there's lack of good quality land supply and good quality developers operating there, but wherever you'll see that kind of opportunities available, tier 2 will do exceedingly well too.
And sir, this Dussehra and Navratri sales, how was it? Because we've seen the registration number coming up.
I think very early days, because the festive season, as we call it, has just started. But I think the walk-in flow has been very, very nice, and there is a lot of, I think something about India during festive, everybody starts enjoying, and property buying is considered to be something very, very emotionally attached during this period of time.
Any new in H2, how many new launches you lined up, and which will be the significant one?
I think series of launches, from, we will finally launch a very massive set of series of action in North, starting with something in Golf Course Road. We're finally arriving there. I'm very, very excited. We bought a beautiful piece of land in the heart of Gurgaon, sort of a dream for the team back there. And then we have a series of launches coming in Noida, Bombay. We will open up a new phase in a very, very prominent project of ours, which is the highest selling project of Bombay till date now. We are opening some new launches in Pune, especially in Hinjewadi micro market. We might add few more projects, in terms of the launch pipeline over and beyond what we were thinking initially. But yes, very, very excited.
Okay, that's the word coming in from the Godrej Properties Management. In the meantime, just take a look at what Prestige Estates is up to, for instance, because that's not been the best of quarterly performance from them. And you can see that the stock has been under pressure. They've, in fact, recorded a big drop in the second quarter sales. It's slipped to about 4,000 odd crore rupees versus 7,092 thereabouts in the previous quarter. And of course, collections, though, have seen an uptick of about 4% or so. But Jonathan, just wanted to get your sense on, the entire real estate market here in India. It's coming out of almost a decadal of underperformance, a very, very long spree at that. But where next? Would you believe that at least in the near term, the stocks are priced to perfection?
Yeah, I think you're probably right. Clearly, there's been a lot of money going into the real estate stocks, particularly the better quality ones. But, the overall structural story for real estate in India remains one of a country that is in desperate need of more building, particularly of more sort of low-income type units. But obviously that's not necessarily where the developers are focused. So it is a very strong structural story. But obviously from a stock market perspective, whether the companies at play are playing into the bigger picture or whether they're playing into more regional and local, pockets of wealth, etc. So yeah, you've got to be careful in the stocks you're looking at, the land banks and everything else. So it is an interesting play, but as I said previously, not one that we tend to get too involved with.
Okay, so that's the take coming in on real estate. That's the pack that we're watching out for. But separately, there are a lot of earnings expected over the weekend as well. It's going to be HDFC Bank, Kotak Mahindra Bank, Tech Mahindra, which will come out with earnings. But before that, let me quickly take it across to Naresh and get a chart check going in on some of these private banking names: HDFC, Kotak, Axis, ICICI. Within this four, what will be your pecking order?
Always has been the best performing one, and even now the stock has crossed a 10-day high. Unlike the other names, the first one of the block, so looks interesting. Next would be looking at Kotak Bank. It's been a long time the stock has not been able to cross about the 1900, 1950 mark. And post numbers, if it does that next week, then that would be a big confirmation. There have been many attempts around 1900, 1950 in the last 1 year. So watching out for Kotak post numbers if it can cross 1900.
Since we're talking about these banking names, let's take it across to Gaurav to get a sense as to what the earnings expectations are. Gaurav, begin with HDFC Bank's expectations from Q2.
Well, yes. When it comes to HDFC Bank, we are seeing a little bit of muted performance in this quarter as well. So when we talk about the brokerages and when we talk about the other analysts, what they're expecting is that net interest income may remain flattish on a quarter-on-quarter basis. When we talk about POP, which is pre-provisional operating growth, we may see a little bit of impact of high cost-to-income ratio, and that is the reason why we may see this also remaining a little bit of flattish. When we come to credit cost, now we may see a little bit of normalization in credit cost, and that is the reason why the provisions may go up, and that may weigh in on the profitability, and that is the reason why brokerages are now factoring in around 1% of a fall in profitability on a sequential basis. Although when we talk about on a YOY basis, that may remain flat. When we talk about advances and deposits, now we already know the numbers for HDFC Bank. We have already seen that HDFC Bank delivered deposits growth of around 15%, while advances growth remained at around 7%. And at the same time, when we talk about LDR ratio, that is actually one key thing to watch out for in HDFC Bank, because that was a reason that was an issue which was highlighted by RBI as well. And now when we talk about advances and deposits, the implied LDR ratio comes to around 100%. So definitely people will be watching out on how the commentary comes out on LDR ratio, how is the proposition of the deposits. That will be a very important key thing to watch out for. But when it comes to profitability, they are not expecting any kind of uptick. Lastly, when we talk about net interest margin, which is an important aspect for HDFC Bank, we may see a little bit of flattish growth there as well, around 4 to 5 bips of growth, if not remain stable. So definitely watching out on how the number comes out for HDFC Bank. When we talk about Kotak Mahindra Bank, now we may see a little bit of uptick. Now analysts are expecting this bank to outperform its peers when it comes to advances growth, and in the numbers also it is reflecting. So advances growths are expected to increase almost by 4% on a sequential basis. Deposits growth may also follow the same trend, and because of these reasons, if we look at net interest income, there also we are expecting a little bit of outperformance if we compare it with the peers. Net interest income is expected to increase almost by 2% on a sequential basis. When we talk about PPOP, which is pre-provisional operating profit, we may see a little bit of impact of rise in cost of the spending of IT, because we know that there are some issues which are ongoing with Kotak Mahindra Bank, and RBI is also working with the bank. So we may see a little bit of uptick there, and that is the reason why we may see a fall of around 2% on a PPOP, and PAT will follow the same trend because they do not expect any kind of uptick in provisions to say. Apart from that, when we talk about net interest income, now we may see net interest income going down below 5% mark. We may see around a fall of around 5 to 7 basis point in this quarter, and the reason being that we may see deposit repricing in the bank. There is slowdown in unsecured lending, as we all know, in Kotak Mahindra Bank. And lastly, there is some incremental funding growth coming from corporate and mortgage lending, and that is the reason we may see some kind of pressure in net interest margin. But apart from that, any kind of commentary coming up on the how the activities are going with RBI, how the progress is there, and lastly, any kind of commentary on the tech spends is definitely a key thing to watch out for in Kotak Mahindra Bank.
Okay, a lot of earnings this week, and for the markets, we've managed to hit a one-month low, and some of the key pressure points have been clearly Bajaj Auto all through and through. Kunal, just wanted to understand from you, where is it that you're seeing now moves within the auto pack? Bajaj Auto separately, but what about the recovery in an Eicher and say a Tata Motors?
I think Tata Motors could be an interesting bet at current levels, and the stock, I think in the last 2 months or so has fallen from 1150, 1170 to now I think sub 900 is what the stock tested today. So it's a good 300 plus point correction for Tata Motors, and I think after such kind of a sharp correction, we are seeing positive signs emerging. The stock forming triple divergence on the daily chart. It's fallen below the 200 moving average, but I think today's candlestick pattern indicates that we could be forming a base for the stock. Indicators are oversold for Tata Motors. So I think purely in terms of risk reward, I would believe Tata Motors could be a very good bet at current levels of 900. My expectation is that the stock should come back to at least 1000, 1050 over the next 1 to 3 months. So I think from a risk reward play, this could be attractive. Maruti could be the other stock. I think the stock is almost at 12,000, 12,200 kind of a trading range. Again, the stock bouncing off exactly from its 200 moving average. Today's candlestick pattern is very, very interesting. It's formed a bullish hammer pattern for itself on the daily charts, which means we could be looking at much more positive upside for Maruti over the next 1 to 2 weeks also. So from a short-term play, 12,500, 12,600 could be a target for the stock.
Maruti, Tata Motors both look good on the charts. But Jonathan, how are you positioning yourself for the consumption sector in India?
Well, I mean, just talking about the autos, we have some exposure to Maruti, but clearly, on the domestic side, particularly rural side, it's been a bit difficult for that sector. But then on the bigger picture side as well, I think clearly there's some big structural shifts globally going on in the whole auto space. So, it's a difficult area. China's clearly having an impact in many markets across the globe from an EV perspective. But clearly, the local competition is beginning to push back a little bit from that. So particularly on the autos, it's not an area we have some exposure, as I said, to Maruti, but we're quite select about that. Whereas Tata Motors, I think, there are ongoing issues with Jaguar Land Rover that keep us on the sidelines, in particular to that sector.
That's a take on Tata Motors, but we also spoke with analysts to figure out what's happening at Zomato, because that potential QIP has put a bit of a question mark as to what's the use of that fundraise, because they already have 10 to 12,000 crore cash on books. We tried to decode that with Karan Thorani. Hear out what he had to tell us.
The reason for this fundraise is very clear. One is, I think, they want to take advantage of the situation. Investors really want to invest in these high growth internet names. There is a lot of interest here. Swiggy IPO is around the corner. So I think they would want to make the best of this opportunity. The market opportunity is quite huge here in terms of expansion, in terms of scale. It could take everyone to a surprise in terms of what the kind of scale quick commerce market could reach, over the medium to long term from a perspective. So I think they want to be kind of well prepared for that situation as well. The third thing is that, of course, they want to have a bigger cash pile versus competition. That's what we believe. Clearly, if you look at Zepto's recent rounds of fundraise, they would be at close to more than $1 billion. Swiggy, has got about 6,000 crores, and with the latest fresh infusion from the IPO, they would also breach the $1.2, $1.3 billion mark, and that's where Zomato is today potentially. So, given the kind of market leadership situation that they have, both in the food segment and the quick commerce segment, I think if they're able to raise more money, and they're bound to have more cash versus competitors because of their size and scale.
So that's the take coming in on Zomato. Kunal, what's the take on the charts of this one and what is your BTSC trade?
So Zomato specifically would not be, I think looking at the charts as of now, because the stock today is forming a bearish candlestick pattern. So my expectation is that maybe the stock could correct by at least another 5% kind of a margin. So maybe closer to 240, 45 could be a better levels to buy Zomato. In terms of BTST trades, I would look at two stocks. The first one is BAN BEML, something which I highlighted in the morning as well as yesterday. Looks attractive. The stock is up 5% approximately. It's managed to cross above its 50-day moving average quite comfortably today. So would look out for targets in the range of 4,400, stop loss at 3,900. And the second is BAN Wipro. My expectation is that the stock has completed a bullish flag formation on the daily charts, and this could be a very strong candidate of a breakout. Buy with a target of 600, stop loss 525.
Right. Naresh, what about your closing ideas?
So first would be a buy on Tata Steel bouncing back, stop loss at 153, target price of 162. Second is a buy on ICICI Bank, clearly the leader in the banking space. Stop loss at 1250, target price of 13.
Point taken. In the meantime, take a look at Sundaram Finance. That stock has managed to perk up in the last few minutes. And SJVN is the other one which is coming up on my radar. That stock too has shot up, and ditto can be said for Muscat Talk as well, holding on to decent amount of gains. But Jonathan, just wanted to get a better sense from you in the last few months and the kind of sideways move and correction that we have seen. Have you used the opportunity to buy something afresh or increase your exposure to any of the sectors?
Yeah, so it has been interesting how the market has struggled a little bit, pretty much virtually at the same time as we've seen new measures out of China, which has obviously caused some foreign investors to pull out, and the index obviously to come off a little bit. I think probably from a foreign investor perspective, looking in at India, it still looks probably in the very short term a little bit pricey. So there's a little bit of uncertainty there. But obviously, the message we always give to clients is this is a great market to be in for the long term. Consumption, those sectors will remain very buoyant. Yes, they're relatively expensive, but there's a lot of structural growth that the underlying index can play into. And certainly when we continue to look at India versus China, there's a lot of attractions in India that we just are struggling to find in China. So yes, very short term, there might be a little bit of money coming out, but I think on most other time frames, it still looks very attractive.
Jonathan, since you did talk about consumption and a long-term view here, would you say that continue to have a bigger exposure to urban consumption? Or niche consumption, so to speak, because rural consumption clearly has a lot more sensitivity to inflation.
Yeah, you're absolutely right. I think where you can find consumption plays which are more geared into the urban sector, it does make more sense. And obviously, yes, the rural sector is huge, but it is, as you rightly point out, more cyclical than what we're finding in the urban areas. And obviously, when you look at stocks that are geared more into the urban side, they generally trade at a bigger premium for exactly that reason. But yes, it is a very good sector to play.
That's the overall take on India versus China as well. It might be tactical, but for now we are seeing a massive exodus of money when it comes to FIIs. 75,000 already this month, much more than what we saw even in that COVID-impacted month of March 2020, and the highest amount of FII outflows that we have seen, at least in cash market, though DIs have been holding one end of the market. But clearly, there is that liquidity getting sucked out of the system. In fact, with that Hyundai IPO as well, we saw a bit of a deployment there. So that too might have impacted overall the liquidity in the system. But for now, the market is holding up at around 24,850 comfortably. The bank Nifty is above the 52,000 mark at the moment. But Tata Consumers is also expected to come out with its earnings. Let me now take it across to Snehi to get a sense, because overall, Snehi, it hasn't started on a very positive note when it comes to consumption. Could Tata Consumer be a different story?
Well, yes, the street is expecting a good set of numbers this time for Tata Consumers. On a consolidated basis, year on year, let's take a look. Revenue is expected at 4,340 crores compared to 3,734 crores, an uptick of more than 16% on a year on year basis. And new businesses like Capital Foods and Organic India are expected to aid top line this time around. You have EBITDA that's also expected to increase by more than 16.5%, coming in at 626.3 crores compared to 537 crore rupees. EBITDA margin is being seen at 14.8 crores versus 14.4 crores year on year, and EBITDA margin expansion is likely to be lower due to the higher A&P spends and the efforts on the distribution expansion as well. But let's talk about PAT, because that is expected to be lower, coming in this time at 314 crore rupees compared to 348 crores, lower by 10% on a year on year basis. And this is because of high interest expense and depreciation. These are expected to weigh on PAT this time around. Here are some key expectations. Then the salt business growth is likely to be steady. Domestic tea business is likely to see a marginal pickup driven by price hikes. Nourishco, Sampann and Soulfull are likely to post strong growth as well. However, the international tea business is likely to post soft growth on a like-to-like basis. Some important factors to watch out for in these numbers: segmental performance in domestic business, update on the growth businesses as well as the margin outlook that the management is likely to give in its commentary. But well, yes, keep a close eye on these numbers. A good set expected for Tata Consumers this time around.
Okay, that's the take coming in on Tata Consumer. But Naresh, stack up some of these FMCG charts for us from a Tata Consumer to an ITC, though not a pure play FMCG company for sure. Unilever, Dabur, etc., because a lot of damage has already been done after Dabur came out with its second quarter updates.
So after that downtick, it's become a case of a consolidation across the board. It's been a surprise because the rally was strong going from June to September, but now we are back to the same prices where it started from. So the only name I would still continue to like is Hindustan Unilever that crossed back into new all-time highs. And now at 2,700 odd levels could say play a bounce back towards 2,900. But rest of the names, it's a tough call to trade right now.
Right now, that's the view on some of these consumption names. But come tomorrow, it will also be Tech Mahindra, which comes out with its earnings. We are expecting an improvement in terms of earnings. Yet the overall expectation is a bit wide because the constant currency expectations for growth are anywhere between 0.2 to 1%. But we have a number closer to 0.3% in terms of constant currency. The dollar revenue is expected to be flat quarter on quarter. 1,572 crores is what, $1,572 million is what we are expecting. In terms of rupee revenue, it's a number of 13,240, which will be a growth of almost 2% on a quarter-on-quarter basis. Margin is something the street is watching out very closely this time. It's an expectation of a 70 basis point improvement. 9.2% is what the consensus poll number of EBIT margin is throwing up, and that will mean a profitability jump up of almost 20% this quarter, so that the number comes over 1,000 crore. Remember, last couple of quarters, Tech Mahindra has been marred by one-off issues. They had taken some one-off expenses. That's not expected to happen this time. Enterprise business is expected to lead growth, even though telecom might remain a bit soft. Margins will benefit from the efficiency measures. Plus, the overall mix of revenue has changed for the positive, so watching out for that. In terms of deal wins, $500 to $600 million is what Kotak is penciling in. So that's what we are expecting for overall Tech Mahindra as well. But shifting focus away from IT and then talk about what exactly is happening in the real estate sector. We played out what Godrej Properties had to say about the pickup in the overall Mumbai region apart from NCR and Bangalore. Let's hear out whether this is something which is corroborated by Tata Realty management as well or not. Mr. Sanjay Dutt speaking with my colleague Anurag Shah.
Also, there's a lot of disruption going on internationally thanks to the war in Israel and of course in Ukraine, which has created a lot of opportunities for laborers to go overseas and work and at very good salaries and compensation. So what that has done is put a lot of pressure on construction. The impact of this would be that our projects may get delayed or may get impacted by cost. My rough estimate would be any delay of about 6 to 12 months can cause 2 or 3% erosion of return on investment for the investor or developer, and for the customer, the delays to occupy their homes for an occupier to commence the business. So it has a huge business implication.
You said 2-3% on the project cost because of the delay, in overall delay. Return, yes, sir.
The cost can go up by 10 to 15%.
How is the overall demand shaping up in real estate, especially in the residential real estate? And are you seeing the traction in tier 2, tier 3 cities also?
There is a very large demand. The economy is doing well. So obviously job markets are good, job confidence is good, people are creating wealth. All that is helping drive demand. So I think it will continue. Tier 2, tier 3 cities, the demand is even higher. And I think with the manufacturing taking place in remote areas, demand for the industrial worker will also be very significant going forward. So I think overall there will be a very high surge in demand which will continue. The main impact would be the prices and the cost and the time of delivery.
Okay, that's the Tata Realty MD and CEO speaking with us. But winding up for the week and the day, let me hand it over to Snehi for the closing trades.
Well, absolutely. Let's take a look at how we've panned out. It's been a rather lackluster week for us. But if you take a look at today's trading session, Nifty seems to have recovered pretty well for itself. 116-point uptick coming in from the Nifty as of now, and 0.5% higher is where the Nifty is. Sensex too managing to hold on above that 81,300 level right now. You have almost a 0.4% uptick coming in on the Sensex as well. Broader markets also have recovered today, doing rather well. Although small cap is rather flat, you have the mid cap index that's holding up with gains of roughly 0.3%, so looking good over there as well. But well, yes, the advance decline ratio continues to still be evenly divided between the advances and declines. So it's been a rather lackluster market for us today over the course of the week, if you could say that. But well, yesterday it's been a rather good day for the market, and we're seeing the green on the Nifty after a very long time, in fact, coming in for the markets. Let's take a look at some winners and losers today. You had Axis Bank that helped the Nifty recover today, so to say, on the back of some good results coming in. Brokerage notes were also rather a beat coming in on this stock. Axis Bank up 5.5%. Wipro on the back of Q2 numbers and brokerage notes supporting the stock going ahead, so 3.5% uptick there. Aisha, ICICI Bank, Shriram Finance. We also have a news flow coming in from Shriram Finance where we understand that they may be mulling a stock split going ahead as well. So that's also something that bode well for the stock. And what did not do well today for the Nifty was Infosys, down 4.5% on the back of a rather lackluster set of numbers. But more than that, it was the bearish brokerage notes that hurt Infosys. Asian Paints, Britannia, Nestle, Tech Mahindra, HUL. Funny to know, in fact, interesting to know, Britannia, Nestle and HUL were the top Nifty losers today. The FMCG pack was rather subdued in today's trading session. So that's how the indices were looking today. But if you take a look at some sectoral gainers and losers today, you had Nifty Bank. Well, Nifty Bank has been a broad outperformer over the course of the week. It's been outshining the Nifty, and Nifty Bank has also done pretty well for itself, up 1.6%. Nifty Finance Services, Metals, Media, PSU Banks, Autos, Energies, all of these indices have done very well today. However, it was Nifty IT that was deeply under pressure on the back of these Infosys numbers that came out. Let's talk about some winners and losers today. The one stock to talk about today has been Manappuram Finance on the back of that SEBI action coming in, where it has barred its subsidiary Asirvad Microfinance from disbursing any more loans from the 21st of October. That has hurt the stock a lot. But good to also know that it has broken out of that 15% lower circuit it was at one point, and 12.8% lower is where the stock is right now as well. Let's talk about the city gas distribution companies, the likes of IGL, MGL, all of these, both of these stocks, in fact, this entire basket of stocks, including Gujarat Gas, were tanking away in today's trade. You have MGL down by almost 10%. Let's pull up an IGL and see what that one's doing. More than 10% cut coming in, and this is on the back of the APM gas allocation level being cut. So all in all, this is how we're shaping up for the day. Some gainers, some losers, but nonetheless, after a very long time, the Nifty is ending in the green, up below that 25,000 mark nonetheless, but an intraday gain coming in of roughly 0.5% on the Nifty.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.